Hello, this is Japanese Economic Review Channel. This time, let's take a look at SBI Securities' domestic weekly outlook.
It's great to be here. A lot of data to get through this week.
Absolutely. We're broadcasting today as the Japanese Economic Review Channel, or as you might know us locally, Nihon Keizai Tokai Channel, and we're doing something a bit different today.
Yeah, a bit of a focus session.
Exactly. Instead of casting a wide net, we are going laser focus on one source, the domestic weekly outlook from SBI Securities. We're looking at the week of February 2nd through February 6th, 2026.
And SBI is a good one to focus on. They really have their finger on the pulse of the retail investor in Japan.
That's the thing, isn't it? When they publish an outlook, it's not just a prediction. It can almost become a self-fulfilling prophecy for where that retail money is headed.
I think that's a fair assessment. And looking at their report, they've broken down the week into three critical pillars, which is how we'll tackle it today.
Okay, what do we got?
First, the big picture.
Mm.
The weekly stock outlook. You know, the numbers, the overall mood. Second, we'll dig into the key materials in Forex. Basically what's driving everything behind the scenes.
The currency.
The currency, policy, all of that. And finally, the main event, really. The weekly timetable.
And I've been looking at that timetable, and it's not just a list of dates. It looks like a minefield.
It is a convergence of events, for sure.
You've got this massive collision of Japanese corporate earnings, critical U.S. economic data, and there's even a major global sporting event kicking off. It's a huge week.
It really is. You have the micro story of individual companies crashing right into the macro story of, say, U.S. employment.
Okay, so let's jump into that first pillar then, the weekly stock outlook. Before we look forward, we have to look back, right? Where did we end last week?
We did. The report puts the Nikkei average closing at 53,355.59 yen.
Which was down almost 500 points, 491.28 to be exact. And the TOPIX was also down, what, about 60 points?
Yeah, closed at 3,569.55. So not a great end to the week.
It really wasn't. And I have to play devil's advocate here. We keep hearing about how strong the market is in 2026, but shedding 500 points in a week? That doesn't feel like a bull run to me. What's the drag?
It's a classic case of what analysts call a heavy top.
A heavy top.
Yeah, the market isn't necessarily bearish, it's just exhausted. Last week was all about caution. Caution ahead of the FOMC meeting, uncertainty around U.S. administration policies.
Everyone's just sitting on their hands.
Pretty much. Buyers step back, volume dries up, and the path of least resistance is, well, down. It wasn't a panic sell-off. It was just a lack of conviction to push higher.
Fatigue, then. So given that fatigue, SBI's forecast for this week is a range for the Nikkei between 52,500 and 55,000 yen. That 55,000 feels like a ceiling. What could possibly push us through it?
Well, the report points to the so-called Goldilocks scenario in the U.S. That's the underlying support.
I see this term everywhere, Goldilocks. It sounds like everything's perfect. Is that really the case, or is it just, wishful thinking?
It's the consensus view, but you're right, it's a fragile one. The idea is the U.S. economy is cooling just enough to keep the Fed from hiking rates.
But not so much that it triggers a recession.
Exactly. Not too hot, not too cold. It's this narrow path that's keeping a floor under Japanese stocks, especially the exporters. If the U.S. economy falls off a cliff, our big names suffer.
Okay, so the macro environment is fine. But fine doesn't usually spark a rally. You need something more. Looking at the source here, it seems that spark is supposed to be AI. Again.
I know. It feels like we've been talking about the AI boom for years.
We have.
But the conversation's different now. It's moved from hype to actual hardware delivery. The report highlights a specific aha moment with Advantest, ticker 6857.
Right, I saw that. They raised their full-year forecast.
It's not just that they raised it, it's why. They are seeing massive specific demand for what they call psych testers.
System-on-chip testers.
Exactly. I mean, think about it. Everyone's buying these high-performance AI chips, but you can't ship a single one until it's been tested. Advantest makes the machines that do the testing.
So if their order book is full, it's a leading indicator.
It's tangible proof. It means the chip manufacturers are seriously ramping up production. The demand is hitting a factory floor, not just the marketing brochures.
So Advantest is the canary in the coal mine. If they're busy, everyone's busy.
Precisely. And that's the bull case for this week. With hundreds of companies reporting, investors are hunting for the next Advantest. But the market is heavy, so it's going to be a stock picker's game. The index as a whole might struggle to break that 55,000 wall on its own.
Which brings us to that external push, Pillar 2. Key materials and Forex. The yen.
Right. The forecast range here is 152.00 to 155.50 yen to the dollar.
152 to 155.50. We feel kind of stuck in that range. But the report mentions something interesting. It says the market is checking the Trump trade. What does that actually mean in this context?
That's a great question. So the Trump trade, broadly speaking, is a bet on inflationary U.S. policies, things like tariffs, tax cuts.
Which would normally mean a stronger dollar and a weaker yen.
Usually, yes. But the word checking here is key. It means the market is starting to question the timeline. Investors are realizing policies don't happen overnight. So that aggressive buying of dollars based on political promises is unwinding a bit.
So the Trump premium is fading.
It's being reevaluated, let's say, and that's why the dollar felt heavy around that 152 level last week. The market is saying, okay, show us the policy, and until it sees it, it's hesitant.
I see. And stepping into that vacuum is the Fed.
Always. The market's still digesting the last FOMC meeting. All eyes are on Chair Powell. If he sounds even a little bit worried about growth, what they call dovish, that dollar weakness could accelerate and push us toward 152.
And what about on our side? Domestic factors. Bank of Japan is in play.
Of course. The report specifically says to watch JGB yields Japanese government bonds. The BOJ is releasing its opinion summary this week.
And that's important because
Because it's the raw, unfiltered thoughts of the board members. If we see more of them talking about rate hikes or slowing down bond purchases, our domestic yields go up.
And if our yields go up, while U.S. yields are stalling.
That gap between them narrows and the yen gets stronger, which, as you know, is generally not great for the Nikkei's big exporters.
A very delicate ecosystem.
Well,
Okay, let's get to the main event, Pillar 3, the weekly timetable, February 2nd to February 6th, 2026. This is where the rubber meets the road.
right. Let's walk through it day by day.
Monday, February 2nd. The theme here looks like policy and components.
That's a good way to put it. We start the week with that Bank of Japan opinion summary we just mentioned. That could set the currency tone for the whole week.
And on the corporate side, we've got TDK and Kyocera reporting. Not flashy consumer brands, but they're the guts of the whole electronics industry.
They really are. They're bellwethers for global demand for things like smartphones and EVs. We also have Mizuho Financial Group, and then in the U.S.,
The ISM Manufacturing Index.
which is our first hard data point on that Goldilocks scenario. If ISM comes in weak, recession fears are back on the table.
All right, on to Tuesday, February 3rd. I'm calling this one the Consumer Pulse.
I like it. We have a 10-year JGB auction, which is technical, but the big one everyone will be watching is Nintendo.
Nintendo. And it's not just about last quarter's sales, is it? It's all about the guidance for 2026.
Exactly. The market is desperate for any news on the successor to the Switch. If they're vague, the stock could get punished. They report alongside Itochu and Denso, the auto parts giant.
And in the U.S., the ultimate consumer data point, Alphabet, Google.
Ad spending. It's the first thing companies cut when they get scared, so Google's earnings tell us how corporate America is really feeling. Plus you have Ford, which links directly back to Denso's report from earlier in the day.
Wednesday, February 4th. This feels like a clash of eras.
Yeah.
The old guard versus the service economy.
It really does. On one side, you have the heavyweights, MUFG, Sumitomo Corp, Hitachi Zosen, the titans of traditional Japanese industry.
And on the other side,
You've got Line Yahoo and, funnily enough, SBI, the very source of our report today.
that's a little meta, isn't it? SBI telling us to watch out for their own earnings.
It shows confidence. But seriously, Line Yahoo and SBI represent Japan's digital economy. Watching how they perform against the industrials gives you a great snapshot of where the growth is.
And in the U.S. on Wednesday,
We have Disney and Uber more consumer sentiment, and AR.
ARM. That connects back to our chat about Advantest in the chip sector.
Correct. If Advantest is selling the testers and ARM is licensing more chip designs, the AI narrative is strong. If they tell different stories, we have a problem.
Okay, Thursday, February 5th. This is just Japan Inc. Day.
Without a doubt. The list in earnings is like a hall of fame. We start with a 30-year JGB auction, which matters for long-term borrowing costs.
And then the earnings. My goodness. Sony Group, Mitsubishi Core, NTT, Nippon Steel.
It's huge. Sony is a proxy for global entertainment and tech hardware. Nippon Steel tells us about global infrastructure. It's massive.
Even Ajinomoto is on the list.
And that's an interesting one. Food stocks are defensive. If investors are scared, they buy Ajinomoto. If they're feeling confident, they buy Sony. Watching those two on Thursday tells you a lot about risk appetite.
And that brings us to Friday, February 6th, the grand finale.
This is the day that could change everything. First, we get Japanese household spending data. Are people actually spending?
Amen. The king, Toyota Motor.
Toyota, the bellwether for the entire economy. Their guidance on the exchange rate is what everyone will be watching. If Toyota says they're basing their forecast on, say, 145 yen to the dollar,
The market will freak out
Yes.
because we're way above it.
it would imply they see the yen strengthening a lot. We also get Tokyo Electron on Friday, another huge chip play. So you have the biggest car maker and a top chip equipment maker reporting just hours before the weekend.
And just for a bit of extra flavor, the Milano Cortina 2026 Winter Olympics opening ceremony is that night.
Right, but traders won't be watching the ceremony. They'll be glued to their screens waiting for the U.S. employment statistics.
The jobs report.
The big macro finale. It comes out after our market closes, but it will dictate how we open the following week. If jobs are too hot, the Goldilocks story dies. If jobs are a disaster, recession fears spike.
So Toyota and Tokyo Electron set the stage during the day, and the U.S. jobs report could just flip the whole table over on Friday night.
That's the risk. It explains that heavy top. Who wants to make a huge bet right before that Friday collision?
Exactly. It feels like a wink to be nimble, not aggressive.
No.
So to wrap this all up, what we have is a tired market, a currency waiting for clarity, and a schedule just packed with conflicting data points.
And for you, the listener, the key is that interplay between the 155 yen level and those Friday reports. If Toyota delivers and the U.S. jobs report is just right, we might finally break that 55,000 ceiling. But if either of those fails, we're likely sliding back down.
Here's my final thought for you to chew on. We talked about the AI hardware boom with Advantest. We mentioned the optimism around the Winter Olympics. There's a lot of good news in the headlines. But looking at the schedule, are we pricing in perfection? If that U.S. jobs report is just slightly off, too hot or too cold, does all that optimism just evaporate? Are we looking at a sentiment-driven rally in a market that is fundamentally exhausted?
That is the multi-trillion yen question, isn't it? Volatility feels almost guaranteed.
Well, we will be watching very closely. Good luck navigating the minefield out there.
Stay sharp.
Thank you for watching the Japanese Economic Review. We look forward to having you with us again.